Thank you very much. Good morning, everybody, and a warm welcome to the panel on closing the SME financing gap, strengthening financial systems, and revamping the continent's capital market. I think we all know the significance of SMEs worldwide as job creators, as engines of growth. In the continent, we have about 2 million formally registered SMEs, but then when you add in the informal sector, we're looking probably at about 3 times that. So we estimate between 7 to 8 or so million SMEs in the continent. We heard yesterday from Antonio Tajani from the Commission that Europe has in the region of 23 million SMEs, creating 85% of the employment in Europe. A slightly different dynamic there. So the objective of this session is essentially to draw perspectives from my distinguished panelists and African public and private sector leaders about very concrete ways that both the private sector in Africa and with the private sector in Europe and the public sector at the heads of state level, also with the European heads of state, to put forward some practical suggestions that could end up potentially with your support and feedback in the communique from the summit. So I have a very elite and distinguished panel here. To my left, another high-level leader that needs no introduction, but I will. It's His Excellency President Mahama from Ghana, the Republic of Ghana. A warm round of applause, please. Then we have Aziz Mubarak, the founder of Afriquinvest, a leading private equity and venture capital fund across the continent. We have Admasu Tades, who is the CEO of the PTA Bank operating out of East Africa. And we have the continent's most prolific trade financier, the president of the African Export-Import Bank, John Louis Ekra. So I'm going to jump straight into this in the interest of time. Mr. President, I'm going to start with you. In Davos, you stated that you had 4 priorities between now and 2050 for the continent to really advance. So these 4 priorities were jobs, 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 and jobs. So it's 4. Anyway, so could you just tell us how you see that happening in the context of small and medium-sized enterprises in Africa?
Well, I guess the SME sector has been recognized, as the driver of economic growth. Mm-hmm. And so attention is focused there to see how we can expand that sector in order that it can create more jobs. Mm-hmm. Africa has the fastest growing population. Mm-hmm. It's a positive, it's a negative if we're able to manage it properly. If we're not able to create enough jobs to employ the bulging youth, then we're going to have social tensions and all that. And so that's the priority for us. And to do that, the SME sector is more capable of absorbing these myriad youth in the sense of creating jobs that are not high-tech, automated, but have a certain degree of labor intensity to be able to bring more people in. And agriculture becomes the natural focus. Okay. We need to produce more food to feed our people. We need to process more of those foods, create the whole agricultural value chain. Okay. And so that's one of the focuses that we're looking at. Other areas include ICT and so many other sectors that we've identified that we're investing in to ensure that we're able to meet the growing population.
Superb. We heard yesterday, for example, that China is pursuing a different quality of growth, a growth that's putting a lot more pressure on wages, so wages are increasing, and that this sort of low-value manufacturing space, there's a potential void because they're opening up about 85 million jobs that the continent could ably meet its target of 10 million formal jobs needing to be created each year to accommodate the growing youth. But I'm going to now move, because this session is much more focused on access to finance. What role do you think the public sector can play in increasing and improving access to finance for SME growth and private sector growth in Africa? The public sector leadership, sir.
The problem with finance is twofold. One, because of the high risk of borrowing to lending to SME sector, the banks, shy away from SME lending. Most of them are opening SME departments now, but because of the high risk, very little of formal banking credit goes to the SME sector. And so what we had tried to do as government was to bypass the banking sector and lend directly to the small and medium enterprises. Okay. That has not proved very successful because government is worse. The banks are much better in lending, to the SME sector than government. And so we have a high portfolio of lost government money that was lent directly to the SME sector that government cannot retrieve.
Right.
And so now we're going into partnership with the banking sector. Government has established several funds. There's a venture capital trust fund. There's an export development and agricultural investment fund. But rather than lend directly to the SMEs, what we do is to subsidize the interest rates and give it to the banks to give to the SMEs because they are better at monitoring and collecting the money back. So we've learned some lessons.
Right. So the rumor that maybe the few development finance institutions within Ghana would potentially be merged, pure rumor, is it something that you're thinking about?
We're thinking about it.
Superb. Superb. And also, again, in Davos, you mentioned that, there had been some kind of reflection where you thought that the African private sector had not enjoyed the same incentives of the international private sector. Is this a message that you're sharing with other African leaders? And how would you recommend that the European private sector partners with the African private sector to pursue growth opportunities on the continent?
It's a strategic partnership that would lead to an exchange of knowledge, exchange of expertise, and so it's something that we're pursuing. But all in all, looking also at sharing experiences within our own common sub-region. One of the major hindrances to the growth of our small and medium enterprises is the fact that we are cocooned in little countries and therefore have a smaller market share than, say, China or some other country. If we measure the markets in West Africa, we're looking at a market of between 350 million and 400 million people. And so pushing the integration project forward is one of the strategies for growing our small and medium enterprises too.
Fantastic. I mean, the integration agenda is trade-driven, so I think this is your area of expertise, John Louis. But to trade, you need to be able to access the type of financing facilities. I mean, just tell us a bit about the collateral requirements of banks. How can that be improved so that SMEs who don't typically have that level of collateral available can still get access to finance? We're looking for innovative solutions here.
Yeah. Well, first of all, I would like to agree with His Excellency the President that it cannot be either government or banks. I think it should be what I would call a public-private partnership at that level. Banks are equipped to analyze risk, and that's their job. It's not the job of government to analyze risk. Now, government could come in with a scheme to provide the collateral for small and medium enterprises so that commercial bank can lend to them. Otherwise, you cannot ask commercial bank to take commercial bank money and go and take high risk that represent the SME sector. That is one. The other way, which we have experienced in Afrexim Bank, has been to include those SMEs in the supply chain. Take extractive industries, for instance. They need a lot of small and medium enterprises in the value chain. Now, those SMEs can get contracts for the larger one, which have sufficient creditworthiness. Then you structure the transaction around the credit risk of the strongest credit in the chain. We've done this in the gold sector in Ghana. We've done this in the oil sector in Nigeria. We've done this in the copper sector in Zambia. That's another approach to risk. So it allows you to structure it around the strongest part of the chain. Another way to do it, which we've seen increasingly used, are institutions like Africa Guarantee Fund, which provides guarantees at a cost, at a price, and you pay the price for the risk, and you cover that way. Another hindrance that we see from the commercial banks is the size of the transaction. You know, if you ask a commercial bank to go and lend $500,000 to a customer, and then how much are they going to charge to recover their cost? So that's one of the problems that we see with the commercial bank lending to SMEs.
Okay. Now we're also going to focus just a little bit on the capital markets component as well. And I think we were having a conversation earlier about how you can assist African companies, small trading companies, become large trading companies and potential IPO prospects. We've seen Dangote, one of the larger African conglomerates, started as a very small trading business. He obviously created some form of ecosystem around him that enabled him to corporatize, list, and become a prolific representation of African business in many respects. I think, as Aziz mentioned earlier, he has the market that he can work with. Can you just share some views with us about, in your view, how to create an ecosystem that supports the emergence of substantial African trading conglomerates that have the prospect to eventually exit through an IPO and access African capital markets?
I think if those companies stay typically at the level of just trading, it's going to take a very long time. My view is that those companies should graduate from pure and simple trading to value addition. That is transformation. It's much needed in our economies. You know, many of our countries have multiplied the production of their commodities, but still very limited value addition is retained in the continent. So what you need to do is for those SMEs operating as trading companies to get progressively graduate into value addition. And then from that value addition, they can easily exit in an IPO.
Okay. So what type of ecosystem on a practical level can assist that company move to that stage?
I think you would have to see, to have a combination, a partnership between risk capital at some stage and commercial bank lending, which will essentially be like working capital provision. A partnership between the investors and the commercial banks could essentially provide this, the answer to that.
Okay. Aziz, we're going to stay on the topic of capital markets and IPOs. You're in private equity and venture capital, and we know that only about 8% of IPOs in Africa are actually from private equity exits, notwithstanding the fact that, you know, when they do eventually exit through an IPO, there's about a 12.6 times earnings in terms of the valuation, which is actually on average for these ones. You know, what in your view should the private equity community do? Because I mean, these exits and these valuations are actually typically higher than a trade sale, which is what you look for. It's typically higher than you selling that asset to another private equity house. So why are we not seeing more growth of IPO exits from private equity, and what should we do to see more of that to strengthen African capital markets?
Yeah, thank you, Hubert. Maybe I will start because the topic is how to improve access to finance to SME. Because for me, I mean, what is needed now, I mean, in our environment, and we are really facing this situation on a daily basis, is to improve the environment in which the SME are working in Africa. And when we are talking about improving the environment, part of the improve of the environment should come from public policies. Public policies means improving infrastructure. And yesterday I was listening to one of the speakers in a workshop. We tend to forget that part of the infrastructure is data, for example, availability of data. It's not just port, logistics, roads, maritime transportation, but it's much more than that. It's also enabling, on the regulatory side, the SMEs to improve, and also helping, these SMEs to access to markets. And I take the opportunity of the presence of His Excellency to speak about Ghana in the pharma sector, for example, which is a very promising sector in several countries in Africa. The situation was blocked for a while, and it has been deblocked recently just to allow, SMEs, and we have invested in SMEs in the pharma sector, and we have a representative of a brilliant SME in this sector in Ghana in this room. The fact that the Ministry of Health puts all the focus really to bring these SMEs and to give them somehow an advantage in a small SME Business Act is something which is crucial. As soon as you get access to orders, to market, of course, the bankability, if I can say so, or the access to finance in the banking sector will improve by a high factor. And if you take the case of Dangote, Dangote, of course, was taking advantage of a huge market in Nigeria. He was clever enough, he's brilliant sponsor, and he did extremely well in doing so. So for me, the local environment is extremely key, really, to make the SME sector emerge. I'm not saying that we don't have to focus also on the financial sector, which is something which has to be done. But I rarely have seen, a financial institution not giving financing, to a strong SME. Of course, there are some factors which are linked to the SME itself: governance, transparency, HR, and this type of stuff on which the SME itself has to work. But I think that the basic and the fundamental is really to improve the quality of our SMEs and to bring them to a level where the appetite of the financial institution will be higher. Coming back now to your question on access to the capital market and to the example you have given, it's true that it's only 8% of the venture capital industry which is bringing companies into the IPO market. But let's compare this number of 8% not to the 20+% which happens in more mature market, but to zero, which was the situation a few years ago. And I remember when we created the Africa Venture Capital Association a few years ago, the number of persons attending the conferences was quasi-zero. Today, the conference is taking place in Lagos, and I can tell you that there are hundreds of professionals attending. So the industry is doing into that direction, and for me, we don't have to see IPO just as a generator of multiples. Of course, it's good to say that we are running for multiples and to reward, the risk taken by our investors. And by a certain way, I don't think that the 12-time multiple is something to keep in mind, because I think that it will give a wrong perception on what private equity are looking for. Private equity is looking for a decent money which is in line with the risk. So we don't have just to improve the multiple in order to say that the multiple is in line with the risk. We have to reduce the perceived risk in Africa, because the risk which is perceived in Africa is much higher than the reality. The reality is totally different from what everybody has in mind. So when I speak, and now we are raising a new fund, in the US market, and interacting, with US investors, they were saying, okay, but we can get 2.5 or 3 times X in Silicon Valley. Why should we invest in Africa when you promise only 3 times X? My answer is to tell them maybe the risk in Africa is comparable to the risk in Silicon Valley in some industry. And I'm not joking. Right. We just exited from a company in Rwanda, and I remember in 2008 when we invested into that company, everybody was considering that it was, quote-unquote, and I apologize for the Rwandese here, and don't share this point of view, as a very, very risky venture. At the end of the day, the multiple is high, and the company is doing extremely well in an environment where the governance is really taking place. So for me, IPO, is an ultimate place, but we should look at the IPO only as a way to finance company. And for me, if the venture capital player forget that the key factor is the SME itself and focuses only on his return, he will fail in his story.
Okay. So what do you say to the CEO of stock exchanges from across Africa, whose leaders are encouraging them to be more innovative, to create dedicated platforms on their stock markets for SMEs, and they are basically saying, we really need to work with the private equity community in a more structured and systematic way, because that's the pipeline. You create companies that you improve their governance, you have the opportunity to be with them anywhere between 3 to 5 years to prepare them for this potential IPO. What would your response be to an African CEO of a stock exchange that says, let's work together?
Yeah, anything which goes into a direction which improves the access to finance to SME is something which we have to encourage. And to be honest, I mean, with you, I'm not a strong believer that this compartment would be really the right one for the next coming 3 to 5 years. To be honest, because I think that the first step for the SME is really to improve their governance, to improve the way, I mean, they are managed, and bringing this company to the market with a lot of investors when the level of maturity is not there might be a little bit counterproductive. Means that if we have 1 or 2 bad stories, it will spoil the total market. So we need some more preparation. And for me, if you ask me about how to improve access to finance, one basic thing which has to be done now is really to empower the banking system in Africa. It seems basic, but we have a strong infrastructure. And let me maybe speak about an initiative which we started a few years ago with the Dutch government. We have started a fund dedicated to the financial sector in Africa. This fund has 2 scopes: bringing equity, so to empower the banks, and bringing technical assistance. And when I was talking about Cogebanque, this bank in Rwanda, I mean, this is exactly what we did. So together with the development agency of Belgium, we have brought money, but we have brought technical assistance to the bank, which allowed that bank, because we cannot substitute the bank being in Côte d'Ivoire or in Nairobi. The bank has to work locally and has to be very close to the client with the good tools. So we have improved the equity of the bank, and in the same time, we have put a heavy technical assistance program with the help of the Belgian government to raise the capacity and the competencies there. And I think this is stage 1. And we were the first to start a fund dedicated to the financial sector. But for me, this would be one of the recommendations, really, that IFIs invest heavily in the financial sector to improve the skills of an existing infrastructure. I can take an example of Fidelity Bank in Ghana. His Excellency, I mean, Edward Defa, who is a good friend and who has increased his equity now, he's doing exactly that. And I think this should be a first. It's a simple stage. It seems to be basic, but the work has to be done with the current infrastructure. This would be one of the 3 recommendations I would like to make.
Superb. Admasu, you're a seasoned banker. Do you think there's a lack of capacity? And my specific sort of question to you is that when people talk about African banks and SMEs, they often say that African banks are much more geared and focused on corporate and institutional clients, and as a consequence do not build their institutions with the expertise to properly assess SME risk.
It's true.
Absolutely.
It's true, but it's changing, and we have to accelerate.
Aziz, you are now a banker. I was actually addressing it to Admasu, but please, if you can finish your point quickly. This is interactive.
Well, let me start by thanking Aziz for bailing me out on a difficult question. I think I'd like to start, Hubert, by just saying, first of all, we should recognize where African banks are coming from. I think if we look back 15, 20 years ago, the African banking sector was in extreme crisis, and the focus really was more the systemic risk to the economy arising from that. And so the good news for all of us is that African banks have come around very nicely. They've rebounded. And of course, the question now is, how do we take it to the next level? And I think it's true. African banks have been a little bit averse to lending to the SME sector. There are reasons for that. I think many of the panelists have already alluded to different bits and pieces of that reluctance. There is an issue of skills. There's an issue of structure. His Excellency the President talked about specialization, new departments that will allow new procedures, new risk assessment methodologies to come out that will allow banks and officers of banks to be a little bit more comfortable in reaching out to a clientele that normally don't produce the right kinds of information, that don't have the indicators that would allow officers to actually do their jobs with manageable risk. So there is a lot intrinsically that has to be done within African banks to deal with that sort of problem.
Would bringing in proper expertise to be able to assess SME credit requirements be a specific intervention that you think would increase the access to finance through these same institutions?
Yes, I mean, certainly I think skills development and institutional development as well within the banks themselves along the lines as has been discussed is clearly there. But I think, you know, it really goes back to the issue of the partnership that was referred to. Governments and banks on the one hand, but SMEs themselves have quite a bit to do. I think, you know, there's been reference to SMEs needing to be a little bit more organized, to be a little bit more open, a little bit more transparent. They need to do that with venture capitalists and investors who come in on the risk side, but they also need to do that with banks, because the tradition of most SMEs in Africa is they don't have an experience of receiving capital from third parties, so they tend to operate in ways that's not very easy for banks and even investors sometimes to actually reach into those enterprises and be partners. Okay. It's not just equity investors who want to coach and advise enterprises. Even banks want to do that. Part of the specialization that is required in African banks to reach out to SMEs involves more supervision, more outreach, an element of advisory based on what bankers see coming through the statements. So obviously it is a risky segment, so you have to be engaged. You need to catch the problems early, and you need to, you know, facilitate the process of early resolution. I think on the side of states, of course, as has been mentioned, there's need for resourcing. There is reluctance on the side of capital, but there's a very, very important area of continued emphasis that needs to be brought out here, and that is the whole question of the ecosystem in regard to the institutional framework, the legal framework, and the regulatory environment. Because for banks sometimes feel that once you have a client that goes into difficulty, and if you need to do what bankers have to do, to be tough, to foreclose, to deal with recovering bad debts, the legal systems are very, very difficult to deal with. Okay. You have a lot of problems still today with enforcing guarantees. So you may have institutions that issue guarantees. You try to call up those guarantees, still quite a bit of challenge there. So I would say we need to square the problem. You know, there's 4 role players: the SMEs and the venture capitalists have a role in addition to governments and banks themselves. And I think for our partners, through an EU-type resourcing initiative, I think a colleague here has talked about strengthening the financial sector. There's many different elements in that capacity development that needs to happen. I think that would be the obvious point, but I think the reform agenda, getting the courts to work, making those small institutional things within the control of Africa to actually work better, I think there's much to be said there too.
Super. So we've just sort of really looked at the banks themselves, but if we look at the SMEs, I mean, one of the key issues in terms of potentially de-risking and better understanding the risk profile of SMEs is the absence, apparently, the wider spread absence of strong financial management and operations expertise within the SMEs themselves. In your view, would an initiative to sort of help make that sort of chief financial officer, operations director role stronger, make it easier for you as bankers to provide SME funding to those institutions? And how do you think companies should access that type of support? To you there.
Yeah, well, I couldn't agree more with you. I think there's definitely need to reach out more to SMEs in a number of different ways. I think the skill set that's required is not just accounting and finance. It has to do with other areas, administration. It has to do with control, governance has been mentioned. There's a whole suite of skills that need to be strengthened within many SMEs. The question is, how do you do it? I think there's been some very interesting discussions amongst venture capitalists and equity investors talking about how those kinds of partners can come in very early in the process of the life cycle of an enterprise to build capacity, not just in a generic way, but to share their risk and to provide guidance in terms of how to organize an enterprise. You know, angel investors, apart from normal equity investors, are perhaps more important for many of our SMEs because you need somebody to take that early stage risk in an enterprise, even before sometimes the prototype is proved. Yeah. For an equity fund to come in, they want the prototype, they want to see some very real potential. Often, many of our SMEs are very informal, they're pursued on the impulse of an entrepreneurial thought. It's very, very early before the normal players can come in and boost the scale and strengthen them to move to another level.
Excuse me. Yes, Mr. President.
Yeah, I just wanted to add, in Ghana, it's important for them to improve their, governance and, transparencies in the small and medium enterprises sector. And so what we are trying to do is to create an alternative market that allows small and medium enterprises, to register and be able to raise capital on the alternative market, and through that process improve governance, improve their transparency in terms of keeping their books and all that kind of thing. So that's also something that is happening. But there's a certain love for sole proprietorships in Africa. I don't know about the other countries, but in Ghana, people want to be in control of their business. And so even when the opportunities have opened up and there's the possibility for the SME to grow, the love of wanting to keep control of their business, inhibits, that kind of development. To reduce risk, we've introduced some interventions. We've established a collateral registry that allows SMEs to register their collaterals so that it's easier for banks to accept those collaterals and be able to give them credit. We also have started a credit rating agency, still in its infancy, but I think that as it grows and is able to rate SMEs, it will reduce the risk that some of the SMEs, some of the banks perceive in all SMEs. There's a certain suspicion of SMEs once you come in that this is high risk. If we're able to rate them and categorize them in terms of risk, then it makes it easier for the banks to be able to determine who to give financing to.
Those are some very concrete initiatives, and congratulations on those. Yesterday we had the CEO of GlaxoSmithKline, and he made the point that there's a lot of education needs to take place from institutions in Africa speaking to global investors to explain the actual versus the perceived risk. And I think having a rating that can actually be assessed and interrogated is certainly a very concrete way to make it easier for the investors to assess the SME segment. And I think that's a nice segue for us to move just before we open the floor for questions. Part of our job here this morning is to empower President Mahama with some concrete proposals that he can share with his peers and colleagues at this summit to say these are very specific recommendations to stimulate more access to SME funding and to address this funding gap and to revamp Africa's capital market. So I'd like to start with you, John Louis, and we're looking for, and this is the case from each of you, and you'll have the last word on this, Mr. President, 3 concrete proposals that can really address the SME funding gap that the African delegations, the African private sector, the European delegations, and the European private sector can implement this year, can start simple, practical recommendations. Can I have your 3, please, John Louis?
Well, first of all, the intervention of government to provide collateral. I think that's the first concrete proposal that I can make. The second one is about the legal system in our countries. There's a lot of suspicion from commercial banks, at least, that if you have security, it's just worth nothing at the time you want to enforce it. So there is a need to strengthen the legal systems in our countries. That is the second recommendation that I want to make. The third one has to do with the cost of financing in itself, because commercial bank money is short-term and usually very expensive, because it's pegged to the cost at which government itself raises money for treasury bills and so on. So if you have treasury bills at 15%, clearly you cannot lend to an SME at less than 15% because it presents a higher risk. So the only way to make the difference is for government to subsidize those rates. Otherwise, it's not going to happen.
Thank you. Adamasu, your 3 concrete proposals.
Well, I couldn't agree more. I hope it's working. Yeah. I couldn't agree more with Jean-Louis. I think the first point is to continue to deepen and strengthen the judicial sector, not just in terms of the laws on the books. Even their creditor rights need to be strengthened a little bit, perhaps. But actually, the enforcement side couldn't be stressed enough. There's a question of speed of judgment. There's a question of impartiality of the treatment of the issues. Even multilateral banks, such as ourselves, we have difficulties in that regard, let alone ordinary commercial banks. So there's been good progress in the continent, clearly, in the past decade, but I think there's a lot more deepening that needs to be done. That should be the easier part, given that it's within our hands as Africans. But there is an issue of resourcing, and here sometimes there's confusion, because when you look at African banks, they're very liquid, and many people will say it's not a volume problem, it's an intermediation problem. Many banks came out of the financial crisis very strong, under-leveraged, well-capitalized. So really, it's not a question of availability of money per se. Here, I think one has to differentiate those banks that are very liquid and that have volumes in place versus those who've managed to find a formula to intermediate intensively and support those with lines of credit appropriately priced to allow them to deepen the work they're doing very well.
Is that your second?
Yes, I think it's a resourcing issue. It's a question of lines. And again, I'm saying many would probably say, but Africa doesn't have a volume problem. It has an intermediation problem. You even have a problem with African capital being overseas, whether it's central banks or pension funds or sovereign wealth funds. So some observers might quite quickly say, but it's not really a volume problem. There is African capital. How come it's not working?
So it's intermediation and repatriation.
Intermediation and encouraging African capital to flow back into the continent so that it can go into the hands of institutions that have proven themselves, and there's quite a few of those around. I agree, we need to discriminate based on performance and track record, but there is quite a bit to be done there as well. I think for external partners, again, it's about targeted resourcing, strengthening the financial sector, strengthening the judicial sector through partnership-based programs. I think that would clearly be needed. So those would be my main ones.
Okay. Aziz? And I certainly do hope that there's going to be a systematic engagement between the private equity community and the stock exchanges, but don't let me influence you.
I mean, the first thing for me is to start a heavy initiative really to empower the banks with a heavy technical assistance program, like what the EBRD did also in the former Eastern Bloc in Europe. So technical assistance for me should be 1/3 of the total commitment, and this is for IFIs, and they did it in Eastern European countries. And the examples which have been made also in Africa have been extremely successful. So for me, this would be my first recommendation. I have a very first one also for His Excellency. First thing, I mean, to improve the financing of SMEs is that the government pays quickly for the working capital need. And if because the government is a big client, and if we get money immediately, I mean, it will really decrease the pressure. My second recommendation, and we are launching with the OPIC, the Overseas Private Investment Corporation. Is it a blasphemy here to say OPEC in the European Union? No.
Global community.
No. We are launching an initiative of a mezzanine financing fund. So it's a fund giving, it's not equity, It's not senior debt, it's mezzanine financing, and it's long-term financing, which matches the need of the companies which are being financed. And for me, this is also an instrument which can be used. And by the way, if I take the example of European Investment Bank, they have backed one of our initiatives in Algeria a few years ago with mezzanine financing, so 3-4 years before you start the first payment, and then repayment which are based on the cash flow of the company. And I believe that this is an initiative which can really bring something to the SME sector, and which is not collateral, which is without collateral, you can say, because the remuneration is an equity remuneration. The third one, because talking about SME gap, I think that if we take SMEs in general, you have early stage SMEs and more mature SMEs, and the most difficult side is the early stage SMEs. And for me, this is a game of equity. It's not a game of debt. And the equity does not like, I mean, this segment of startup companies and new companies coming to the market. And here again, I mean, we are unable to attract commercial money. So it should be the work of governments, it should be the work of IFIs to create early stage funds in order to fund with heavy equity, I mean, new created SMEs, and to reduce the risk of the bank. And after 3-4 years, this company would have been created with a strong basis of equity, maybe incubated also by the private equity fund, and in the same time have put in place, I mean, the right rules in order to allow these companies to go to banks with strong financials. So this would be my third recommendation, an important initiative to support early stage companies.
Superb. I mean, we hear that the infrastructure deficit in the continent is a huge investment opportunity. And when you actually look at a lot of the companies that are developing those projects, the project developers, those are the SMEs in many respects that really need the venture capital support, whereas before it was perceived to be an access to finance issue to fund the entire project, as opposed to support the developer, structure the project, and have the right venture capital financing in place. So we see that a lot of leaders from the public sector are now saying, how can we support infrastructure project developers who prepare the projects, as opposed to, I don't know, glazing over when they see massive sizes of investment required for the actual project. Mr. President, if we could have your 3 recommendations. Thank you.
Actually, Aziz hit on one of them, and that's the issue of fiscal responsibility on the part of governments.
Okay.
Yeah. Often when we have a situation where government borrowing on the domestic credit market goes up, then interest rates, government instruments are the most attractive to banks because they are sure bets for getting your money back.
Right.
And so the banks prefer to buy treasury bills and, invest in government instruments. And so that crowds out the private sector. So one of the factors to make SMEs grow in Africa is for governments to exercise fiscal responsibility in creating an environment, that allows them to expand. Then we also have to leverage as much skill as we can. One major source of these skills are an increasing repatriation of African expertise back to the continent. And so we have several of our citizens who went and lived outside, who are packing bag and baggage because of the success stories they're seeing back home, and are coming back home with the skills that they acquired. And several of them are setting up, small and medium enterprises in the services sector, especially in ICT and telecoms technology, and they are making a very good success out of it. And so encouraging more of that, I think it's important. But then also adding to what they said, improving the legal environment so that issues of litigation can be settled as quickly as possible. In Ghana, what we've done is to set up what we call the commercial courts, that are a kind of fast-track court that take, small contractual litigation, land issues, and all that kinds of thing, and then sorts them out as quickly as possible.
Superb. I'm going to stay with you for a second, Mr. President. One of the key issues that we keep hearing about is land rights.
Yeah.
What's your strategy to assure investors that when they invest in an asset or a company, that they actually have title or some kind of collateral that is reliable?
We had a system of land tenure that was not based on titling. It was based on trust. In the past, I knew that tree was the boundary between my grandfather's land and the next person's land. And so there was no need to register title. Having to move that into the formal system of ensuring that people can leverage their access to property to be able to raise credit is what we're trying to do. It's not easy to change people's attitudes set in stone over centuries.
Yeah.
And so we have a land administration project which is currently going on, encouraging people to register title to their lands so that they can use that as property to be able to leverage financing.
Superb. Mr. President, just one final comeback before I open the floor. What would your advice be or approach be to encouraging informal operators in the continent to formalize?
We must find a way to make it rewarding to them. And if you get the right mix of incentives to make it rewarding, then they would be encouraged to formalize. In Ghana, it is happening. We have a lot of them moving into the formal sector, but the pace is still quite slow. I wish we could hurry it. And so we need to use all kinds of incentives to make that happen.
Okay.